Hey, everybody. Welcome. Let's get right to it. You see the market here, and you say, boy, it was a pretty down day, down 76 on the Dow. The transports were down. Everything's pretty much red except for healthcare and a few consumer staples and maybe a few utility stocks. You only kind of see half of the picture here because the market did cut its losses by more than half as the day went on. But overall, still a negative day. I'd say the most positive thing we could say is the small cap stocks, Russell 2000, actually almost were flat on the day after being down quite a bit. And we want to see that, if you're bullish, that risk-taking appetite come back into the stock market. And of course, came after the French elections on Sunday. Market was down yesterday, never really had that big whoosh down that kind of panicked everybody. It just kind of trickled back up a little bit, ended a little down on the day. Today we got that whoosh down, but it didn't stick. Now, we look at this not only on a daily basis, but intraday, and the daily wash doesn't have to come in on the panic at the end of the day. It could come in the middle of the day, and perhaps that's what we are seeing right now. So this is the picture that I was basically describing. You can see we gapped down this morning, continued weaker. Panic started to pick up. The VIX started to rise as people started to protect their portfolios, sell out of a lot of things. And the Dow Jones was down about, I think, 180 at one point or so, down to about 12.8. And then had a rally around noon, started to fail back, and it thought, oh, okay, it gave that back up. And it started to make it higher highs. And we actually finished close to the highs of the day, and the Dow finished at 12,930 or so, 932. But anyways, so we had that rally intraday. Now, switching gears to the S&P, and this is a daily picture. We're not looking at an intraday anymore. You can see kind of what happened here, and I've drawn a few moving averages. We've got the 20-day, which is obviously the green one, the more short-term, the 50-day in pink, and the red is 100-day. And a lot of you probably don't use the 100-day. I think it's important to have that on your screen because other people use it. So even if you're somebody that says only look at the 50 and 200 or the 20 and 50 or whatever, I would use the most common ones. Simply, if you're not going to use them for trading, you need to understand that other people do. And maybe we saw it bounce off of the 100-day moving average today. But the thing that I had been worried about is this potential head and shoulders. We talked about that the last podcast, and the fact that it didn't really happen here. And some people are saying, well, this is the right shoulder. Everybody. So this particular person has one left shoulder and two right shoulders, and the outer right shoulder is almost as tall as his head. So look, you can make up all kinds of of stories, and the charts can basically be whatever you want it to look like and to fit your story. Bottom line is that the market still is not clearing out of, I guess you'd call it more of a sideways pattern, which really started in this time frame. So we went up to the top. We've kind of been bouncing around here. Not a very good picture there. Let me draw another one. Let me draw one that fits what I'm trying to tell you. Right? That's what people seem to do. But I think seriously what we're looking at is this right here, which is kind of support, and or it has been at least now, because remember before we were bouncing around in this 1360 range, and now we bounced down a little lower. So now you got to say, okay, that's now the support. So that's going to be an area, even though that wasn't support before today, this was support. So we broke through it today, and that caused a lot of selling. You can see the volume picked up down here. So that broke down, obviously, but the 100-day moving average came into play, and that's what caused some buyers to come in. But now that we have bounced, this is your new support. And yes, I did change the color of the line from that not so masculine color blue to this nice solid black, manly black. But here's the thing now. So here's now the support. So now this is going to be the next area that we bounce off of. And if we bounce off of it, then the bulls will say, aha, we just have been going sideways for a while, kind of digesting some of these gains. And the bears will say, well, if we bounce and then we head straight down, look out below, we're going to test the 200-day moving average. And perhaps we could, and that may be the case. So right now, what I'm saying in the big picture, after all these lines and arrows and different colored arrows, is I'm telling you that it's still unclear because we have a couple of things that haven't been resolved yet. Number one, we have the fact that, again, we have a lot of sectors are starting to head down, and we're starting to get deterioration from the likes of, again, the coal, material stocks. They've been going down. Then on top of that, we've had some of the leadership, right? The Starbucks, the Apples, Chipotle, CMG, the price lines all breaking down. Those were your leaders. Now they're coming down. So that still hasn't been resolved. And on top of that, what you see here is the 20-day moving average has crossed the 50. And again, we talked about it last podcast. A lot of technicians will look at that and say that's bearish. And again, we bounced off the 100. So if we hold that, fantastic. But we're kind of in between. If you want to take a shot, so to speak, and you're a little quicker, then what you would do is obviously say, okay, I'm going to buy, and my stop is going to be the 100-day moving average, which, right now today is at 1345 on the S&P. We closed at 1363. So that's my place, 18 points. I'm giving myself about 1% on the indices to stop myself out. If you want to play it that way, this is a logical place to do it after that happened today. However, as fluid as this situation is over in Europe, the markets could be up 200 based on some European rumor, right? Or they could be down a couple hundred points based on some Fed governor saying we don't need more QE3. Meanwhile, the economy is going down the toilet. You just don't know. And so the thing you got to do is, if you're going to participate, use tighter stops. And that may mean you get stopped out of something and then it returns back up again. And so be it if you're going to do that. On the other hand, if you want to play things more conservatively, then obviously what you want to see is you want to see this particular level hold right in here. You want to see this thing maybe trail up, come down a little bit, and then start to head back up again. But bottom line is it's got to clear this other area right in here. So now what we have is we kind of have this going on, this little wedge. So, again, if we bounce up through it, great. If we break down below it, then we're probably heading down to the 200-day moving average. So that's what we're in between is the bottom line. I think there's some things to buy. I mean, there's plenty of stocks, especially in the staples and utilities area, that did well today as a sector. Healthcare was up, staples were up, utilities were up. So there's places to be, and obviously what was the losers of the day? Those were the areas like consumer discretionary, financials, materials. The most cyclical things were the ones that got beat up today. Let's go to Apple quickly. I'm not going to go through a bunch of charts today just for the sake of time, but here's Apple. And as we know, it came down to a nice little buy spot, but that was the day they reported earnings, so I didn't buy it. It gapped up, and then it's basically filled that entire gap, and it has bounced off of the support again. If it has an update tomorrow, and if that volume's stronger, then I think you have a nice trade here. And it's not a bad place to buy it anyways from a fundamental standpoint now that it's much cheaper. It was almost, $645. Now it's at $568. But if you're trading it, then you have to use that line as your stop. And then you have to start looking at the 100-day moving average as your next place for another possible support, which is in the 510 area, 515. That's your next if it breaks through. If you're buying it for investing or long term, this is not a bad spot just because it's still a relatively cheap stock. But just know that you may have to average down into it if you're looking to do that. From a trading perspective, this is setting up as potentially a nice trade. Now, this is all the big caveat is, what does the market do? If the market has a 180-point down day tomorrow, then obviously Apple could easily break back through there and head on down to the low fives. But it's going to be a buy at some point. But it was a nice turnaround today, but at the end of the day, it didn't really change the overall pattern. As we look at the S&P once again, the overall pattern still remains the same, which is we had a down day on heavy volume. We did have an intraday reversal, but this has to be followed up with much more buying. And if it's not, then we know that the selling's not done yet. All right, folks, quick podcast. Sorry about that. Just wanted to get this in here and just kind of tell you what I'm looking at. Not doing a whole bunch of moves, to be honest, right now. Not not going in there trying to be a hero, buying a bunch of stuff on red, but also not panicking and selling a bunch of stuff. There's some things that got stopped out and sold a couple of things, but nothing, no major moves in my portfolios right now. As you started to hear a little panicky today, some people panic, and I think you could see that in the VIX. You certainly didn't hear the people that are bullish say, "Oh, buy the dip." You didn't hear that on TV, even though the dip was bought. So that tells me that both sides are a little concerned about their position. So that tells me I want to be a little more constructive and still play things more on the conservative side, as I have been for the last few months. All right, folks, take care, and we'll talk to you soon.